Hello everyone, hope you had a great weekend. So in this video, we are going to run you through all the weekly forecasts we have posted over the weekend. So to help you understand better of our trading plan for the week and so that you can prepare yourself and always plan ahead. Alright, so to start off, let's start with the euro against the US dollar. The euro US dollar broke above a falling wedge as it climbed for 4 consecutive days before facing resistance on the last trading day. The bullish reversal came about from the bottom of a bigger range as well as the key demand zone at 1.1760. Alright, so you can see that this entire market range, right, is what I'm talking about, the bigger range, and the reversal right here as it broke above this falling wedge. Alright, so with a strong breakout and reversal from a key level like this could already be the beginning of a new short-term bullish trend. And taking a deeper look, the reversal is due to the completion of a bearish Elliott wave as well as an ABC corrective wave. And as of current, after Euro US dollar found resistance at the 61.8% of the falling wedge, both highs and lows are clearly getting higher. So this week we will look for buying opportunities as the at the very beginning. So looking for entry from 1.1830 onwards. And if this new bullish trend continues well, it could potentially retest 1.20 psychological level again soon. Alright, so at the end of the day, what we are seeing is that we are kind of bullish buyers in this case because number one, alright, the price has reversed and break above a falling structure such as this falling wedge, from the bottom of a major range right here. So you can see a very strong bullish wave right here, and technically speaking, we are actually in an ABC corrective wave, right? If you were to put the chart a little bit more towards the back, and you will be able to see that this is actually an Elliott wave, impulse wave forming right here after you have completed this the ABC. Now of course that also includes this ABC formation that's forming within the C portion of the ABC corrective wave, right? So not going into that so much, but most importantly is that we are seeing a valid reversal right here, and therefore we are looking to buy again. And the best course of action to buy is to wait for the price to pull back, alright, back to somewhere maybe right here at 1.1830, because this is the high that we saw the price broke above, and therefore it could be a very good support for us. And of course, if we were to pull a Fibonacci from this swing low to this swing high, we are probably going to see that this is about 50%, and slightly lower there will be 61.8% of the Fibonacci retracement level. So that area itself will definitely be one of the best price for us to buy if we do agree that this is going to be a bullish reversal. Alright, so that's for the Euro US dollar. Alright, next we have the gold. So gold was very well supported at the resistance turn support level at 1795, and last week the price managed to rebound higher but faced with a significant rejection as it retests the current high at 1830. So at the end of it, it was somewhat able to close with a higher low, and that gives the bulls a little bit more advantage. So this week we will be looking for buying opportunity by using the rising trend line as a support, and we are expecting the price to eventually complete a ABC pattern as it completes the second bullish wave at the equilibrium level around 1860. Alright, so essentially what that means is we are looking to buy as the price pulls back right here. So as you can see, this what I did not mention in this post is that if you are able to identify, this is actually an Elliott wave, right? So this wave has been completed and it has yet to pull back in a structured manner before the second bearish wave were to occur. All right, so what's happening right here is that the price has already went up once. So this is the AB pattern that we are assuming, and price came down and we went up again. All right, so it's being supported at this resistance turn support level. So therefore we thought that it might still continue to go up, and yes, indeed went up, but got resisted at the previous high again. And then so therefore at the end of the day, this is still somewhat like an ascending triangle, again not mentioned in the post right here, but essentially we are still looking at the same thing. We are waiting for the pullback, right, and essentially using this trend line as a form of support for the entry price. And if we were to buy, what we are expecting is that it may complete a second bullish wave right here that eventually completes a AB equals to CD pattern right here, and that itself, the CD the CD leg will be completed right within the equilibrium level right here at about 1860 to even 1870. all right, and that's also the very neckline of this somewhat like a double top formation previously. So that is definitely a very important supply level. All right, so that is the trading plan for the gold. Next we have the WTI. So WTI climbed throughout the week and broke above a falling trend line. The bullish trend came about after the recovery of a sell-off in the previous week, where OPEC Plus agreed to increase oil supply, leaving a long lower shadow in the weekly time frame. So if you go to the weekly time frame, the week before, you will see a long lower shadow, all right, showing a very strong recovery. And the entire rebound also showed a strong support by the 63 and 126 moving averages, thus a sign of a strong bullish trend. So as you can see, this is the 63 moving average. Of course, the black color one is the 126, and right here it creates a zone, a supply or a demand zone or a support zone, and then we have seen the price has rebounded off very well, therefore showing a strong bullish trend. So this week we will be looking for buying opportunities by using the 63 and 126 moving average to create support zones. And we expect a breakout of the previous high before any significant pullback in the bigger time frame. Alright, so at the end of the day, we are looking to buy because we saw that there's a very strong rebound of the moving averages, which is showing a strong and sustainable bullish trend. Prices broke above this trend line, which was supposed to help the price push back again or range for a period of time, which did not happen as what we have expected. As you can see, this is a neckline and here's a trend line, therefore that's why we thought that, hey, maybe the oil markets may consolidate for the time being, and nevertheless that did not happen, and right now we're already seeing the price going up. So therefore we thought that, well, since the oil price is being so bullish at the moment, so why not just wait for the pullback? We can go all the way to the 1 hourly time frame, making use of the moving averages to form support zones for us to look for buying opportunity. So to give an example, maybe let's go and take a look at the oil chart. Alright, so this is WTI. Let's go to the 1 hourly time frame. Right, so as you can see, the price as of today has already came down, pushed back all the way into the support zone created by this 63 moving average and 126 moving average. Alright, so this is what we are talking about, and this is where you can definitely look to buy it again. As of right now, alright, this is the previous high resistance and support area. Alright, the price may try retest again. Alright, and as it touches the 126 moving average all the way to the bottom of this entire support zone, that's where you can definitely consider to buy the US oil. And if you look at the bigger time frame, it really isn't any significant pullback at all, and that's what we are talking about. We are just expecting small pullbacks like this in the smaller time frames, and using the moving average as a support to identify good entry price. Alright, so that is the trading plan for the US oil or the WTI. So next we have the NASDAQ. Alright, so NASDAQ fell this week as it has potentially completed the final wave of a bullish Elliott wave. And as mentioned in our previous forecasts, this is also a repetition of a combined ABC corrective and impulsive pattern started from September 2020. Alright, so what that means is that, as you can see, from September 2020, there's an ABC correction. Alright, previously there was another impulsive wave, and after the correction, it started to form another impulsive wave, and after which, here you go, another ABC corrective wave, and then right now is completing another Elliott wave, and right now the fifth wave might have completed due to the sell-off that we've seen last week, and therefore this is what we are trying to say. So as of current, the price has indeed fallen, and this could be the beginning of the major pullback. So we will continue to look for selling opportunities at the beginning of the week, anywhere from the current price of 15,000 to 15,100. Our main target for this sell trading plan is somewhere just above 14,000, right, bottom of a 10-month riding channel, as well as the support zone, right, in between 63 and 126 moving average again. All right, so definitely we are seeing strong support. All right, always we see the price support found support and rebound off from the support zone, right, created between these two moving averages, and 14,000 is, you know, the previous resistance and support area, of course, at the bottom of the riding channel itself. All right, but anyway, that is important for us to know. Only if, let's say, the price really did continues to come down and creates a major pullback. Please understand that what we are talking about is a major pullback, and eventually after a pullback, the price or trend was continued or resumed into a bullish market. We're not talking about a major sell-off or the major reversal of the entire market. All right, this is not what we are talking about. So but in any case, if this is a major pullback, definitely we have a huge chunk right here for us to profit from if we were to sell. So that is what we are talking about. And in terms of our trading plan, in terms of the entry price, let's probably take a look at the NASDAQ charts. Alright, so right here, as you can see, after this sell-off right here, that may signals for the completion of the fifth wave of the entire impulsive wave. Alright, we have seen the price has been ranging in this manner. Alright, it's like trading within a symmetrical triangle. So therefore, right now we are seeing the price has already pulled back all the way to the top of this structure. It might go a little bit higher, but in any case, as long as it's still within this entire region, we will definitely want to look for selling opportunity. And based on our post, we are talking about 15,100, which is right here, and about 15,000, which is right here. So this is the zone we are looking to sell. I know it looks very massive, but in any case, hope you get what I mean, and you are already looking for the opportunity to sell the NASDAQ. Alright, so this is the trading plan for the NASDAQ. Alright, last but not least, we have the Bitcoin. So Bitcoin made a comeback with a lot of firepower behind it as it climbed for 10 consecutive days, rising from 30,000 low all the way to 42,000 high. Right, this is definitely impressive, as we saw that, you know, the price actually closed slightly lower. I mean, it closed lower than the previous closing prices, that's for sure. And we thought that, hey, it might really be the time for Bitcoin to break lower again, but it did not happen. And instead, it just kept on climbing for 10 consecutive days. And right now, it has come from all the way from the 30,000 low all the way to back to 42,000, and finally we're finally seeing a little bit of resistance, but we're still seeing the lows are getting higher, alright, as of current. But anyway, let's come back. So this is certainly not just a major pullback from the recent bearish trend. Alright, this is not just a simple pullback. Alright, and potentially this could be a new bullish trend, right? So however, for the price to pull back beyond 40,000 is totally within expectation, as the key supply zone is still a little further away at 50,000. This area itself is the key supply zone we are looking at. In fact, very much earlier on, we are expecting it to climb all the way back. Ever since it came down to this area and consolidates and starts to pull back, we are expecting to go to this level, but it did not. It just keep on consolidating at a lower price. And well, finally, it does seem that it's finally coming back into this supply zone before we really see a stronger selling pressure coming in again. Alright, so in any case, this week will be a good time to keep buying Bitcoin before it faces strong resistance at about 50,000. So this week we will still be looking for buying opportunities by first waiting for a pullback towards 40,800. Alright, so now that this is being clear, and we are expecting the price to definitely reach the supply zone at the top right here. So during this period of time throughout the week, we can still continue to look for buying opportunity with very little pullback. Again, we can make use of moving averages and stuff like this. So maybe just take a look at the chart for a while. Alright, so this is the chart for the Bitcoin. This is the 1 hourly time frame. As you can see, the moving averages has been a very pretty good support for the Bitcoin. So right now we are already seeing after this bullish wave, it forms something like a harmonic pattern. Alright, no idea what the name is, but anyway, this is definitely a pretty good demand zone, alright, in the shorter time frame for us to continue to buy Bitcoin. And if you pull out a trend line, is being supported right now. Now this might be a good time to buy again, alright, after having all this support right here. If it goes down a little bit further, we still have the 262 moving average as well. And in the case, because we are seeing such a strong persistent uptrend right now, a strong recovery from the 30,000 low, we are expecting the price to continue to climb all the way back to the into the key supply zone at the 50,000 area. Alright, so you can see the high and lows are getting higher right now, so there is really not much harm or risk right here if you were to try to buy again after this pullback. Of course, if you're chasing after the high right here, then that will not be recommended. But since the price has already pulled back to a very decent level with good demand and support as well, that's where you can definitely consider to buy again. Right, so that is the trading plan for the Bitcoin, and that is all we have to share for our weekly forecast. Thank you so much for watching, and we will see you again in our midweek market outlook video. Alright, so thanks for watching and see you again.